Good morning and welcome to the Solder Brothers Tech Fund quarterly update for the month of March. My name's Gregg Taylor. I've met most of you, but also joined by Emily Mohan, who's one of the senior directors on the fund also. Look, the intention today, we don't have a formal presentation to present today. What you will get in the next week or so is the detailed quarterly report where you'll get a little bit additional colour, but it's been a couple of positive outcomes in the fund, which is ultimately going to result in a distribution from the fund in the next week. So we thought it was important to give people a heads up before money starts dropping in their account. So today is really just a little bit of a courtesy update. And once we get out the distribution and the quarterly report, we'll make ourselves available for a more fulsome update where required. So just recapping for those that, I said majority of the attendees of the call are fund unit holders in the Solder Brothers Technology Fund, and we greatly appreciate your support. The fund did close to applications in December of 2025, so the fund is totally closed now, and we've been busy actively managing the investments in which we made. The recap was it was a growth equity style fund where to hold between 6 to 8 investments in the technology enabled space in the sectors of telecommunications, property technology, fintech, and sport tech. And we were fortunate enough to find some really interesting investment opportunities over the last couple of years, which we've deployed the fund into across each of those assets. And the fund was set up as a 5-year fund. So our investment horizon is typically in that 2 to 4 years for the investments in which we make. And we very much see ourselves as our role in the ecosystem in this growth equity space is identifying really solid companies with good growth prospects, partnering with them, supporting the management team and board, scaling the businesses and helping them with an exit. And that's what Emily and I have done together for over a decade and had a bit of luck over the time doing. But what I'm pleased to report is that so we ended up making 6 investments in the fund, and so a real high level that those investments included Prosper, which is a fintech business. We also invested in a business called Market Boomer, which was in the property tech space. We made an investment in the telco space with a business called SkyMesh. Then we made two investments in the sport tech space. One business called Sports Collective, and the other one where we just finalised our investment actually in a business called Engage RM. And the final, well, not this isn't in order, but the sixth investment we made was another fintech business called Ipsy. So it's our intention to give you a real quick update on the status of each of those 6 investments, and then what the exit of a couple of those investments mean. So that's the big news. We have actually fully exited 2 of the 6 investments already, which is truly a pretty remarkable outcome, even exceeding our expectations. And we're very cognizant of the broader market conditions, and continually reiterate the risk versus reward equation in the investments we're in. And sometimes outcomes take a little bit longer than you planned, and sometimes they're a little bit quicker. But you can't. Our view is you can't be too fixed in your thinking. Just really clear on what you think the appropriate IRR outcome is for stakeholders, and drive towards that. And if that gets presented, sometimes you hit the bid, and that's what we've done. So the 2 exits we've achieved. So in February, or the end of February into March, we exited the fintech business called Ipsy. So Ipsy was a payments platform that we'd actually invested in closer to 3 years ago in the broader Solder Brothers group. When we launched the tech fund, there was an opportunity to pick up some secondary stock in that investment at the same price in which the original investment was made, which created a real unique opportunity for the tech fund, and we took advantage of that. And But ultimately, that business, it was a loss-making business when we invested and was subscale. We spent a lot of time driving the management team and the product and turned that into a profitable business where every month of the other financial year where I had 26, it was profitable. It was growing sort of north of 30%, closer to 40%, and it had some really strategic technology. That business was ultimately acquired, 100% cash transaction to the Commonwealth Bank CBA. So we had a number of suitors looking at that business, but CBA were the most motivated from a price and time perspective, and we've effectively doubled our money on that investment, and the time of investment of the tech fund was about 12 months. So I think we'd all be happy with doubling our money in a 12-month period, and and these things don't happen by accident. They're hard work. It's hard work driving the outcomes. You get a bid and you think, oh wow, this is exciting, but there's another 6 months of work to actually execute and get out of the investment. And we're pleased to report that's been done very successfully. And what we really are focused on is getting a good outcome for all the investors, but also we partner with management teams and companies. We want to see them go on to bigger and better things, and we want the staff and the technology to grow beyond our holding period and achieve its full potential. But at a certain point in time, another major investor is the right person to take it through that journey. So please report IPSI completely exited. All the cash proceeds have been received, and Emily will shortly talk about what that means from a return of capital and cash distribution. But just keep in mind, the philosophy of the fund was always that not only would we distribute the gains, but distribute the initial proceeds of any investments we made within the fund. So that's what we're doing with IPSI, and Emily will shortly talk about what that means in absolute dollars and cents per unit perspective. The second business where we've achieved a very favourable exit is a business called Market Boom, and that was the property tech business. Again, it had about a 2-year hold period. It was actually the first investment we made in the tech fund. And it was really in our sweet spot. So remember, Solder Brothers is a large owner operator of hospitality assets, and this was procurement technology for the hospitality sector. Same with IPSI. I chaired the company. IPSI is a director and chairman of that company through the entire holding period, and now exited that board as we exit our investment. But same with Market Boom, I joined the board, work with the management team, and with a view of achieving growth and moving towards profitability and global scale. And we were again successful in doing that. But what we did have in this scenario was another investor that was had probably a shorter time horizon, so they were quite motivated to sell. We contemplated buying their shares and staying on the journey for another 3 years or so, but during that process, we were approached by a US VC firm called Stratum Capital out of San Francisco, and they lobbed quite an attractive bid on the business, which was significant premium to what we paid and what we were willing to pay to buy the remaining shareholder out of the investment. And so we did explore with Stratum, the acquirer of the business, about rolling our equity in and continuing on the journey, because it really is a high quality company, and we believed in the growth prospects. But unfortunately, the VC fund that was buying the rest of the equity had closer to a 10-year investment horizon, and with our fund being a 5-year investment horizon, we couldn't guarantee liquidity for our investors, and there was a risk that we could have got stuck in that investment for longer than what we had indicated to our investors. So we took the decision to take the cash. Um, there was it was again all cash transaction. There was an escrow component, which Emily will speak to shortly, but again it was a very favourable outcome. And again, this deal was done around Christmas time, and it only completed last week or earlier this month, and so legitimately there's another 3 or 4 months of hard work and negotiation getting it through to settlement, and pleased that we've achieved that. And the other thing I'd point out is that I think everyone's very aware of what's happening in the macro environment over the last quarter. From a financial markets perspective, and then in particular with respect to technology stocks and software as a service businesses. So I think the strength of the businesses that we invest in, and we really focus on their defendable IP or their moat. The fact that we received bids for both these businesses that in the December quarter, and there's at least 3 months later, and the world had basically changed very adversely over that 3 month period, and the two buyers had every every chance to try to renegotiate the pricing, and we were able to retain the headline pricing from the original bid in both instances. So again, that was no easy outcome, but it was really a reflection of the strength of our team in getting successful exits, but also the quality of the businesses that we invest in and that we look to ultimately exit. So I'll pause there. And so what that means, the great news is we're about to give a capital return and distribution to investors, and I'll hand over to Emily to give a little bit of detail on sort of timing and quantum of that. Emily?
Perfect. Yeah, thanks, Greg, and great to be here today with everyone. So I might just touch on, Greg mentioned there was an escrow component for Market Boomer, and so the way that transaction works is there will be a bit of a lockup for a portion of the proceeds, and that represents about 25% of the proceeds that we'll receive for Market Boomer. And the way that works is in the event of a claim from the buyer. And so when you go out to sell a business, there's a warranty and indemnity regime that comes into play, and how that kind of operates. And so the buyer requested that there was a portion of the proceeds locked up in the event of a claim. And look, we've obviously been on the journey with Market Boomer now for a 2-year period, and don't believe there will be a claim, but there is risk in everything. And so just flagging that now. But on top of that does sit the company and all of the sellers took out a W&I policy. So the first level of recourse for the buyer of Market Boomer is that policy in the first instance, and then they can only claim against the escrow proceeds. And so we think that there's fairly low risk around that happening. But yeah, so about 75% of the proceeds we've received, but the 25% will be at a later date, and that date's up until the end of December 2027. So that's just a bit of perspective on the escrow amounts, but a bit now on the distribution, which I guess is what we're all here to talk about. So the fund will be making a special distribution, and will be occurring over the course of the next couple of business days, so prior to the end of this month. So the way the fund operates is it does have to distribute at the end of a financial year period, but in line with discussions with all of our investors and the way we like to operate is we've made that happen in the middle of the financial year. So and again, like Greg mentioned, it's super pleasing that we've been able to do so within a 2-year period since the fund was officially opened, and we think that's a pretty good outcome for investors. So getting to the outcome, we've worked quite closely with our tax advisors and our internal finance and operations team. And so the tech fund investors will be receiving a distribution of approximately 25 cents per unit. And And then there's also a number of investors on this call who co-invested alongside the market boomer asset into the SPV MB unit trust. And so for those investors on this call, they'll also be receiving a distribution, and that will approximately be about $1.32 per unit, remembering that there is that escrow component that will be released over the course of the next 20 or so months. So and then I guess separately to all of that, so that's a really good outcome, we think, for the investors of the fund. Most investors got into the fund at a unit price of between I guess $1 and $1.12, and so to get back up to a quarter of your investment back, that's a pretty pleasing result. One to note is that tax statements for the tech fund and the co-investors of that trust will be released after we've closed off the financial year end, and early estimates is we expect to release those by August of this year. So that's a bit of a summary around the distribution. We're also going to, as part of this forum, touch on the broader portfolio, and so I'll hand back to Gregg to run through bit of an update on Skymesh and Sports Collective, and I'll provide an update on Prosper and our newest investment, Engage RM. So over to you, Gregg.
Thanks, Emily. So basically what you've got is and the size of the investments in the fund were not equal, and what you'll see in the quarterly report, we do the respective percentages of each. So IPSI was our smallest investment in the fund, and Market Boom was more closer to the average size. So, notwithstanding that, as I said, we've sold 2 of the 6, and you're getting initial distribution of 25%, roughly 25 cents, which is, depending on entry price, is up to 25%, and then from there we will, there'll be a further distribution relating to the Market Boomer sale by December, or approximately December of next year, and then off the back of that, we've still got 4 very strongly performing assets in the fund, which we'll give you a quick update on now. So firstly, I'll start with the telco business we invested in, and there's quite a few co-investors in that business. Business called Skymesh. What we did there, we've spent the first sort of 12 months of that investment, very much rebuilding the management team and rebuilding the operating platform for that business. It's, we've, transparently, it's probably taken a little bit more work than we hoped, but they often do. But what I'm really confident about is the team we've got around the table now, and the quality of that business now compared to 12 months ago is unrecognizable, and really excited about the prospects. There is one thing that is public knowledge, and so a number of people might be aware of it, though. We did buy that business off a UK listed entity called Big Blue, or BBB is the sort of acronym for the original vendor, and they predominantly took cash, but they took an equity component, shares in the new entity, and there was a deferred component to that transaction. As a result of the lower quality of the business than what we expected, there is currently a claim underway where we're looking for some recourse there from the vendor. So that has no impact. It's not going to cost us extra money. It's just there's a dispute around the deferred payment, so we're still holding on to that. That sits with us, and the value of their equity holding that remains. So we'll keep investors updated as that progresses. It's not a distraction for the business, and the only outcome is nothing changes or our effective acquisition cost for that business comes down. So we're working through that, but as we're getting close to an outcome on that, and look forward to updating investors. Though, in addition to that, it was always and continues to be that the business we acquired was a foundational asset that we're looking at some other merger and acquisition opportunities for, or inorganic growth opportunities for, and we've progressed a lot of that, but quite deliberately we didn't want to move into the acquisition mode until we were really confident we'd bedded down the platform and had the business operating at the right tempo to then consider acquisition. So I guess the sign that we are, again, shortly we'll be updating investors on some progress on the acquisition front. Gives a bit of a reflection of where we are with the original asset and our increased confidence and belief in that. So that is SkyMesh. As a result, if we do end up pulling the trigger on those acquisitions, there's likely to be an opportunity for additional equity into the business, or an equity raise to fund a portion of those acquisitions. And so, as is always the case, the investors in the tech fund will get first opportunity to invest in that. So we look forward to reaching out to all the tech fund investors and the co-investors in SkyMesh in the next couple of months with a more fulsome update on where we're at and potentially where we're going with some inorganic activity. So that is SkyMesh. Another business which we invested in the sport tech space was a business called Sports Collective. This was an investment into the grassroots operating model of sport, led by a proprietary tech platform which manages registration and competition management for community sport. We also acquired New South Wales' largest operator of outsourced school sports solutions called Bring It On Sports. That acquisition was only completed about 6 months ago, or the investment in the acquisition, and we've spent a lot of time integrating those businesses and progressing our partnership around flag football, which is a significant opportunity. Also, there's been some exciting international opportunities for that business. So I was recently over in the US, and we're in quite advanced discussions with a meaningful inorganic opportunity, a partnership opportunity in the US, which is progressing, and also looking at potentially some merger and acquisition opportunities for that business. So all going to plan. It's always the first 6 or 12 months is where all the heavy lifting and formative work's done. We're neck deep in that at the moment, but feeling more confident than ever around the medium-term growth opportunity and the value we can extract from those assets. So that's Sports Collective. I'll hand over to Emily to give a bit of an update on, I guess we'll call it the star of the portfolio, Prosper, and also Engage RM.
Perfect, thanks. So we'll start with Prosper. So I guess most of you are probably fairly familiar with this asset, but at its core, Prosper's a non-bank lender providing solutions to small and medium businesses and enterprises. So as a reminder, the Salter Brothers team led a consortium of investors to take Prosper private. So we took it off the ASX boards in the middle of 2024. So at that time, the business was losing north of $10 million. And structurally wasn't set up for a lot of success at all, but we did a fair bit of diligence on that business prior to taking it private. So a number of opportunities, and they've kind of come to fruition over the course of the last couple of years. So, the management team and the board, and as a reminder, Stephen Benton, who's one of our industry experts and a fintech expert, absolutely, and we lean on him quite a bit, but they've worked tirelessly, and that business is now run rating approximately $40 million in profit, which is really super impressive and far beat our expectation the last month in Prosper alone has been pretty impressive in the last quarter. So, that business, we're really excited about where it sits today. And I guess again, those sitting on this call, the Prosper asset still sits in as cost value in the portfolio. So we took that private at a valuation of $74 million, and with that business now run rating approximately $40 million of profit, we think it's worth materially more than the current holding value. And for a bit of perspective, we think that these assets trade on somewhere between 8 to 10 times profit multiples, to give you a bit of perspective. And so on that note, the company is looking to begin engaging with advisors and strategic acquirers for that business, but it is absolutely in early stages. And so we will keep investors updated on the progress of that. But, there could be an outcome there over the course of the next 12 months. So that's really exciting for the investors of the fund. Moving on now to the newest investment of the fund, and one that we signed in the month of March, is a business called Engage RM. So that business we've been working with for over 12 months now, and completed thorough due diligence on that asset, and got really, really comfortable with the underlying technology, the people, the operations, and the growth pathway of that business. So at its core, it's a sports and entertainment SaaS platform, which is effectively like a CRM system that enables teams, leagues, and venues, to turn their fans into greater proportion revenue share. The company does about $8 million in revenue and has really strong growth in its forecast hold period, which is really exciting. The business is absolutely on track to achieve its calendar year 26 numbers. It does report in a calendar year, so we will be referring to it in that way. But it is a truly global organisation, so it's got customers all around the world. Here in Australia, they've got well-known names over in the US and the UK and European market. So really excited to be working with that business and its management team. So it's got a really strong CEO by the name of Adam Boyle, and so we're looking to get really active with that business, and excited to go on the journey with that one. So I might pause there, Greg, and hand back over to you for closing remarks, I guess.
Yeah, thank you, Emily. And with Engage RM, and as all the investments we make, we do have active directors on the boards of those companies, staying very close and helping those businesses achieve their growth prospects. So again, we live and breathe. We speak to the management of all these companies in the portfolio, conservatively weekly, if not daily. So that they are our babies, and we're very close to them, and really optimistic and confident about the outlook. But just to reflect on the fund, we're largely fully invested now. So what we're likely to do with the remaining capital is to use that opportunistically for maybe further capital rounds in the existing investments that we have, and to that end, there'll be potentially some opportunities for the fund investors to co-invest in future rounds in the 4 remaining businesses as well. But as we'll keep you updated on that. But I imagine definitely in the next sort of 3 months, at least we'll be reaching out to you with some opportunities to do exactly that. But just as I sort of close, and we'll open up to Q&A, but I don't say slightly, where the portfolio is and the outcomes we've got has far outperformed our expectations. We're really excited about the returns that these funds can generate over the next 3 years. The initial distribution's a nice little surprise, early on in the piece, but again, when you look at a couple of the assets there, and you need to do the math on Prosper that Yeah, I think we're all well placed to make a very good return there, and yeah, really confident that all investors are going to get a very positive outcome on this fund over the course of the next sort of 3 to 4 years. And we're committed to regular updates, and we're always available if you want to reach out and have a bit of a chat. But so don't be concerned about the broader macro environment. We bought these businesses well. They're trading very well. We're very confident in their strategic value, and again, extremely confident in the outcomes we can get for investors over the next couple of years. So that was all we intended on covering there. I know there's a quick question in the chat there from Darren, just around the makeup of the approximate 25 cent distribution. Emily, do you have those numbers at hand, just very, very roughly? I know we'll report more fulsome next week.
We are working through just the final aspects of that, but what we're intending on doing as well is sending out a quarterly report, and I'll make sure, Darren, that those items are addressed in that quarterly report for you. But as soon as I have them, I'll be able to reach out to you, but I'll include it for everyone's benefit in that quarterly report.
And just to clarify, we've had detailed tax advice and analysis of that. We are very confident with where it'll land, but we're still subject to final tax sign-off, so we just don't want to misrepresent anything. But our view is, of that 25 cent distribution, we've left a bit of breathing room in that number, so there's a chance that number's a little bit higher, and again, we've also focused on the tax effectiveness of the distribution as well. So yeah, we'll keep everyone updated, but that will come in a matter of weeks, a clear indication on the exact mix of that. All right. Well, again, that was all we intend on covering. Appreciate everyone's time. If there are any questions, throw them in the chat group. But hopefully, you've all got Emily and my details, and encourage you to reach out at any time for a bit of a chat. And we are working on a couple of new opportunities we'll keep people abreast of. But again, just wanted to round out by a genuine thanks to everyone for their support of the product, and look forward to continue conversations over the next few months. Cheers.
Thanks, everyone. Cheers.